Okay.
Yes, okay, it's fine now,
Okay.
right? It's fine.
Yes.
So this
Yes.
is IS what? IS 16, property, plant, and what? Equipment, right? So as I told you, there are five main components of financial statements, which are assets, liabilities, equity, income, and expenses, right? So when we deal with property, plant, and equipment, we speak of assets and specifically non-current assets because assets are divided into non-current, but and what? And current assets, right? Non-current ones
Yes.
are expected to be used for more than 1 year, right?
Yes. Yes.
Yes. Now, over those non-current assets now, we go and look for a specific group called property, plant, and what? Equipment. You know, you would have different types of non-current assets, right? So we are just dealing specifically with a 16 property, plant, and equipment. So whenever you start applying this, you need to know the scope. You need to know what kind of assets are included in this property, plant, and what? And equipment,
Equity.
right? So simply speaking, when you are told about property, what picture do you have when someone speaks to you about property? What picture comes to you?
Property.
Hmm.
Property is like something that someone owns that lasts for too long.
Okay, let me ask you one thing. If you own a property a plant for too long, does it become property? Because you can also have plant and equipment. Yeah, right. You can see this. So I'm just trying to give you a picture. Those are the questions you need to ask yourself, right? If
Yes.
you don't do this, you'll just find yourself, okay, you just memorize, okay, property, plant, and equipment. This is the definition. So you lack the content. You see. So whenever you do study the
Yes.
standard, don't be afraid and say, okay, I have to memorize this and this. No. Just try to get the logic behind establishment and the creation of such standard, right? So
Okay.
whenever you see the word property, this is for accounting purpose. You are right. Just for normal situation, normal life, you are right. Saying property. Property is just something you own, right? But now, when we speak of property, under this case, we only speak of land and the buildings. You get my point? Land and what?
Okay.
And buildings. So
Building.
anything other than land and the buildings actually is not what? Is not called
The
property,
property.
right? And to give you
Okay.
more picture, better picture, you will later go and study something called ICE 40. ICE what? ICE 40. ICE 40 speaks of investment property. You can see the point now. Investment what? Property. So you
Property.
can ask yourself, why have I studied property here under 16 and then I'm going for property again, right? So
Yes.
seeing that you would say, okay, so I need to know the type of properties that can be accounted for using a 16 and be able to distinguish them from those which are applied under S what? S40. That's why you can see now. So if you are done with a 16 property, plant and equipment, S40 becomes much easier, right?
Okay.
Yes. So I advise that you go with that logic behind you for matters to be easier and easier for you, right? Okay.
Yes.
So now you can see definition. When you see this definition, you could say, oh, it's just the definition to memorize. No, this definition tells you what kind of assets to actually apply as what? 16. Not all assets would have to apply. That's what they're saying. They are tangible assets. The word tangible, of course, is no big deal, right?
Yes.
Tangible is something you can touch. Property, land and the building you can touch. Plant and equipment you can touch. That's no big deal. Okay. So these we are told that which are held for use. Now we look at the use of such items, such assets, to be able to classify them under S what? 16. So they should be held for use in production or supply of goods. First of all, in production, let's say we are a manufacturing company, right? You have the equipment, you are using it to produce the goods, right?
Yes.
So I would say, okay, this is what? This plant and equipment is can be accounted for using as what? 16. But also maybe you could use, when you're in a company, maybe let me ask one thing. You are in a company, right? The goods will be produced.
Yes.
So the assets being used to produce the goods come under this category. After producing the goods, what do? You distribute them, right?
Yes.
for the customers. If there are services, you provide the services. That's why you are told for use in production, this is number one. Or supply of goods or services, right?
Yes.
When you go and supply the goods, of course, but also you have to for rental to what? To others. For rental to what?
Okay.
To others.
Others.
Or
Okay.
for administrative what?
Purposes.
Yes. At a company, actually, you could have management, right?
Yes.
Let's say an executive, a CEO may have a vehicle with them, right?
Yes.
To use for their daily tasks. So you can say that that is used for administrative purpose. Maybe the vehicle for the company, maybe there is just a driver there ready to take anyone to any place for administrative purpose too, right? Yes. So whenever you see something like this, for production or supply of goods or services, for rentals to others, or for administrative purpose, you say, oh, this can be classified under property, plant, and what? And equipment. But now for this rental, you will later see and understand, right? No
Yes.
worries now. You will come and see what IS 40 entails, right? And then you understand the
Okay.
difference between investment property under IS 40 and the invest in property defined here. The property
Okay.
under IS 40, as you have been told, it's called investment what? Property. You hold it for investment, right? So we usually have only two options there. You either hold it for rental accumulation or capital appreciation, right? You may go somewhere and buy land, and then you just find someone else bought land and they have not done anything, maybe over 5, 10 years. They are not stupid. They can just not go there and buy land for nothing, right? It's like they have bought it now, but land appreciates rapidly. So they expect maybe after a certain number of years, land will have appreciated and they could gain much more, right? Just from selling it. Right.
Okay.
Yes. So that's the difference between the property here and the investment property there. And now, since you have been already told this is called investment property. So when you have the plant and the equipment for rental, I now need to speak specifically on this rental, right? I'm speaking of rental here so that you can be able to distinguish right now, although you have not yet studied the S40, but you are going there, right? Yes. So
Okay.
whenever you speak for rentals, when you have the investment property, let's say you have a building, it's fine. You may have a building, you may rent it out to someone, right? And they may be
Yes.
paying you. Yes. So in that case, if it's a property, that one is classified as under investment what? Property. So specifically, when you see the word rental here, we specifically refer to plant and equipment with no any exclusion, right? Because whenever you have plant and you have equipment, this is not property. So automatically plant and equipment do not fall under IS what? IS 40. Because IS 40
Okay.
specifically speaks of what? Property. Right.
Property.
Yes. So you
Okay.
should get the picture why you see this word what? This word rental here.
Okay.
Okay. This the other point there. They said they are expected to be used during more than one period or for more than one what? One
Yes.
period. This is just normal. You could have said, for more than one period, it means this is a non-current asset, right? So you could have said from the definition here, property, plant, and equipment are tangible non-current assets. If you write the word what? Non-current here, then there is no
Non-current.
need for this statement, right? Yes.
Okay.
Or this statement just speaks of more than one period, meaning that you will have the assets with you for much longer, normally than a year. Okay, so that's the definition, and that's what we will focus on. Okay, now this is the scope. We're just trying to stick with the scope now. We say a 16 should be followed when you're accounting for this just normal, right? You should follow a 16 unless another international accounting standard requires a different treatment. And if that is the case, you just know, right? Just like I've told, let's say you have investment property. You'll have to use a 40 and not a what? 16. Now you're just being told that it does not apply to the following specifically. Biological assets. Okay, but this biological assets will fit in agriculture. There is a standard called S41. It says agriculture. It specifically explains these biological assets. So it shouldn't be a big problem to you right now, right? For example, they told you biological assets related to agricultural activity apart from bearer biological assets, something like this, right? So you'd see, and I thought maybe wait, there are some assets like bearer biological assets. Let's say you have a tree and maybe it grows. Let's say we speak of rubber tree. You know rubber, right?
Yes.
Yes. Something like a rubber tree could say, okay, I could use A16 to deal with it, right? Because when growing it, you will be incurring the cost, you'll be accumulating the cost, and when it's time, you can know how to start treating it. But no worries about this because we are not going to focus on this because you will really go and study IS what? 41, agriculture.
One.
Yes. So we're
Okay.
just trying to separate them. So writing this, they are trying to tell you that there is a standard called S41 deals with such items. This is what you need to know, right? And then mineral
Okay.
rights and mineral reserves, such as oil, gas, and other non-regenerative resources. There is also a standard called FRS 6 that deals with this. But also, you're told PPE classified as held for sale, right? You may have PPE, property, plant, and equipment here, but maybe it reaches a time when the management says that, okay, right now, I no longer intend to use this asset for these purposes, maybe for production or supply. It's not my intention. Maybe even the sale activity, the marketing activity has taken place, customers have been found, right?
Yeah.
You say something like that. It's PPE, right? But now you won't use PPE I-16 to account for it because if you have percentage held for sale, it is no longer a non-current asset, it is a current asset. So all the principles applied here won't apply. That's why you would have a specific standard called IFRS what? IFRS 5,
Right.
right? So IFRS 5 just gives you a picture to know that, okay, so initially I will have an asset, I will apply I-16. Of course, let's say maybe I expect to use the asset, let's say for 20 years, right? I'll be applying I-16, but also there's a standard called impairment of assets. You know, as time goes on, the asset may wear and tear, right? Over the years.
Yes.
So you'd have a standard used to properly measure the assets called impairment of assets. It does this. That's why when you do this one, you would also automatically have to understand this one, right?
Mm.
But then it reaches a time you say, okay, the asset has been impaired for long. I no longer need to use it. I need to sell it. You say, oh, so right now I'm no longer going to apply I-16 and then I'll resort to IFRS what? IFRS 5. So you
Right.
can see that the standards it kind of accumulate or surround the asset over its entire life, right?
Okay.
Yes,
Yeah.
that's what we're going to see. So you just need to get the picture here so that when you do study any other standard, there are the questions you would be asking yourself. Okay, so just something like that, right? Mhm. As I told you that I-16 won't apply to biological assets. You know, we are yet to start the actual standard, the actual implementation of the standard. So we are just trying to the introduction. They speak of something
Okay.
called bearer biological what? Assets. You will see
Okay.
later about biological assets and agricultural produce, as I've told you there, and that's what? 41, right? For example, let's say
41.
you have a cow. A cow would have the milk, right? So it could have the
Yeah.
agricultural produce. You could have maybe the biological asset, but we won't deal with that. But they're just trying to tell you that you can have something called bearer biological what? Assets.
Okay.
The example of which I've told you that, for example, there are biological assets, especially plantation trees such as grapes, grapevines, rubber trees. I gave an example of rubber trees, right? And oil palms
Yeah.
are within the scope of IS what? 16.
16.
So we just try to, when you want to recognize something in the books, you have to know the cost at which, the amount at which to recognize it with, right? You cannot say I have a vehicle in the books and you don't know its weight. If you don't know its weight, then there is no point putting it in the books because you won't have any figure there, right? Yes.
Yeah.
So that's why I say if there are biological assets, you would apply PPE as usual, I-16, and get their cost. That's why they say this applies to plants which are solely used to grow produce over several periods and are not themselves consumed. You got my point. I just need you to know this, but actually, it's not like you're going to meet this, but it's better to know, right?
Yes.
Let's say, for example, presume maybe you have a cow, right? You have a
Yes.
cow. A cow gives milk, of course, it's an agricultural produce, right?
Yes.
Yes, that's fine. But you can also consume that cow itself, right?
Yes.
You consume the cow. But right now, when you speak of rubber trees, it's not like you're consuming the tree itself. You are consuming what is produced out of that, right?
Yes.
That's what they are speaking of. So if you have biological assets which are bare, they are not themselves consumed. You can use a 16 PPE to account for them, right?
Yes.
But not the products that come out of them.
Yes.
Yeah, that's what they're trying to speak, right? So they are measured at accumulated cost. This is just normal. When you have let's say the rubber tree, of course, from the very beginning, from this early age, you would be incurring the cost of fertilizers, right? Yeah.
Yes.
Irrigation, you'll be doing that. So you'll be accumulating those costs. You say, okay, don't see this rubber tree as this. I've been incurring the cost for a long time now. They have accumulated, let's say, to $20,000, right? So do not just say that I'm going to get the profit. I've also incurred a lot of cost here. My margin is low. Yes. So you just accumulate the cost until they are mature, right? And then
Okay.
you become subject to depreciation and impairment. Now, about depreciation and impairment, you don't have to speak about this because we are even yet to know what to do with this. What? 16. Simply speaking, you just accumulate the cost and the rest you do like a 16 says, right?
Okay.
Yes, because we are yet to understand anything about what? A 16. Okay. Now, before starting, actually, they're also trying to give some definitions here. Of course, it's fine giving some definitions. That's why I told you before that you are not just going to study the words, right? You need to know what is taking place. They are speaking of cost here, residual value, entity specific value, fair value, a lot of definitions. Why all this? Let's start this. When you do study A16, the aim is you have the assets, you need to know the amount at which to recognize them in the what? In the books, right? So you must have some ways to recognize those assets, right? Now,
Yes.
we are just doing the normal reasoning as life suggests here, right? Let me ask you one thing. When you have an item, let's say can you see what I've just done? Let's say this is a car. I'm just trying to take it, or let's say this is a machine, right? This is my presumption. This is a machine.
Okay.
If this is a machine, there are several ways you can derive its value, right?
Yes.
Deriving its value is like it's either you have the machine with you or you do not have it with you, right? If you do not have the
Yes.
machine, what are you going to do to this machine to have it?
We need to raise money in
Yes,
order
to
for
pay
you
the
to
money.
buy
Yes,
or to hire.
excellent. So if you need to hire to buy, that's what we call the cost, right? Am I
Okay.
wrong? That's very fine. I need to
Yes.
acquire it, so that we say it's the cost. Okay, let's presume you have it
Okay.
already, and we say, okay, I've used this enough. Maybe I need another asset. Now you need to dispose it, so as you cannot dispose it for free, right? Oh, okay.
Yes.
Let's say that maybe you have paid the cost. You have the asset with you right now, right? You can say,
Yes.
oh, let me use this asset, let's say for 5 years. Then you're going to use. If you use it, it means you will be deriving value from using it, right?
Yes.
That's what we call an entity specific what? Value. Or sometimes they call it value in use. Value in what? In use.
News.
After using, you may say, okay, this asset, I'm just trying to make some decisions. Should I use it to produce more products and maybe make some money, or should I just sell it outright? I just need to sell it outright, or I'm tired of doing this business, right? So you may say,
Yes.
oh, I don't need, I have no time to proceed with this business. Let me just sell it off. So if you just say that, how much price can I fetch from the market by selling it off? You have your what? Fair value. You see that?
Fair value.
Yes. So whatever
Okay.
you do, you need
Yes.
to know, okay, I'm doing this for this. If you do this, also there are for the related standards, you won't face problems. You better use a lot of time here, but after here, you will be actually up and running from that moment, right?
Yes.
Okay. So this is my point. So whenever you study all these definitions, you can get the picture. Okay, so I'm studying this because this is the way of maybe I already have one asset. I'm trying to measure the value of that asset. Maybe I do not have an asset, I need to acquire it, right? So cost, we are told, it's an amount of cash or cash equivalent paid or the fair value of the other consideration given to acquire an asset. Simply speaking, when you speak of cost, you speak of acquisition of an asset, right? To acquire an asset, you
Yeah.
have to incur something, right? You do not have it with you. But for entity specific value, it's like you already have an asset and you say that, okay, I have an asset, but if I use it for the first year, I would have 10 million. For the second year, 10 million again. Let's say for the third year, I would have 10 million and then I could sell it for 20 more million. So after 3 years, I would have 30 million, right? So
Yeah.
you have your cash flows here. 10 million year one, 10 million year two, and 30 million year what? Year three. Right. So to get the entity specific value, you count the worth of all these accumulation of cash flows that you generate to the company. Right. That's what we call value in what? That's what we call value in what? That's what we call value in what? In use. Right.
Yeah.
Yes. So you would come. Have you ever studied something called time value of money?
No. No, we don't know that.
Time value of money, let me give you, no, I believe that you may have, not necessarily. Okay, what I'm trying to say is the worth of money today is not the same, is not the same as maybe in 1 year or 2 years time, right?
Okay. Yes. Now, when you are giving me that example,
Okay,
like a
but
present value.
exactly. So
Okay.
when you say that I'm going to receive 10 million in 1 year's time, 10 million in 2 years' time, and 30 in 3 years' time, you cannot say that they carry the same weight, right? You have to discount them to present what? Values.
Present value.
So when you get the present value, you have to get used to this term very well because in financial reporting, computation of present value is so common, right?
Okay.
So present value is a single sum is usually equal to future value over what? 1 plus R power what? Power n. R
And
is usually the discount rate power raised to the power of n, right? Yes.
yes.
So you discount these cash flows and this one, and you get the entity specific what? Value. That's why you sometimes call it value in what? In use.
Mm,
That this is the
okay.
worth. This is the worth. If you add them and you discount them and add them together, you get the worth now of the cash flows you expect to receive in the future. Right.
Yeah.
And then you come to fair value. No, fair value doesn't have that time of saying, oh, I need to use this asset for 3 years and get what? No. Fair, for fair value, you just resort to the market immediately and look at the price you can fetch fairly, right?
Okay.
So this is the fair. That's why they tell you it is a price that would be received to sell what? Okay, now
An
this fair value
asset.
definition has been defined to cover for both assets and liabilities. But here we are dealing with A16, and A16 this is the asset, right?
Yes.
So we presume that you have an asset and you need to go and sell it fairly to the market. So we could say it is a price that would be received to sell an asset, right?
Yes.
Not paid to transfer what? A liability. Now we are not thinking of the liability here, so you can cancel the word liability. I just wrote it in full, right? So it is the price
Okay.
that would be received to sell an asset. Very well, that's fine. But now they're trying to speak, it's not any price because you cannot say maybe an asset worth $10 million, you sell it for $6 million, and then you call it fair, but that's not fair, right? So to
Yeah.
actually uh, to actually comply with the word fair, they specify that one, for that to be fair, it should be in an orderly what? Transaction
Transaction.
between market participants at the measurement date. You have to understand these three things here. When you are told at the measurement date, it's like, fair value, depends. Fair value can be very volatile. Today, you may see this price, in 1 week's time, the price changes, right? So fair value keeps changing. That's why they say at the measurement date. that you should actually look at the specific date at which you measured it. You cannot say, okay, this is the fair value. Then in 1 week's time, someone comes and say, oh, this is the fair value. Then you tell them, no, you are just wrong. You are deceiving me. 1 week ago, I went to the market and this was the price. No, that was the price at that date. And now the fair value is different, right?
Okay. Yes.
So there is an essence of saying at the measurement what date. Now we have the two things here: ordinary transaction and the market what participants. When someone tells you it's an ordinary transaction, it's not like, okay, let's presume that maybe I've lost everything in my life, right? I've lost all of my property, right? And maybe
Yes.
I'm left with just a single property to cling on, but I have no any money. That property is worth $50 million. Someone comes and tells me they know that I'm actually in a very high need, so they tell me, okay, I know this property of yours is worth $50 million, but my friend, I only have $10 million. Are you ready to sell it to me or not? Right?
Yes.
Are you ready to sell it to me or not? Or not? Someone due to
I'll be
financial
ready.
problem, they'll just agree, right? So that's not an
Yes.
ordinary transaction. That's why they speak of the word an ordinary what? Transaction.
Transaction.
Yes.
Okay.
And then by the market participants. By market participants, it's like you're just trying to have the same price. You know, in a market that is not proper, you may say that in one section an item may be sold, let's say for $200, but in the same market at a different place, you find out that it's 300 what dollars. The other place
Dollars.
is $400. Then in this way, it will be very wrong, right? You cannot have these different prices, which can be fair value. Now it's not possible. That's why if it is between market participants, they know the market, they know the price that
Okay.
can be fetched from the market, right?
Yes.
Yeah, so you can just see that simple definition, but actually it carries a huge weight.
Okay.
Okay, now from that moment onward, I think the rest, I don't care. They're just normal matters. Carrying amount, carrying amount is that figure at which you'll be carrying your items in the statement of financial position, right? You have the
Yes.
statement of financial position, you would have your non-current assets there. Let's say you have the word written as PPE, you have your what? You have your PPE. You say, okay, I have my PPE, and my PPE right now is worth, let's say, $40 million. Uh, this is my carrying amount. Carrying amount is whatever is in the books. Sometimes people call it book value, net book value, right?
Okay.
People like to call it net book value, but for financial reporting purposes, actually, this carrying amount is the common term. That's to say, it's an amount which an asset is recognized in the statement of financial what? Position after deducting any accumulated depreciation and accumulated impairment what? Losses.
Uh,
So as of now, I hope you know that non-current assets are depreciated just generally, right?
yes.
So normally in the books you would have the cost, that the amount at which you initially acquired an asset, and then you deduct what? Depreciation. That's what they are saying minus depreciation. But now there is something else called impairment what? Losses. You
Loss.
also deduct impairment loss. So this one has its separate standard. You would see it, right? So you have this cost, you have the what? Depreciation and impairment losses.
Depreciation.
Yes. So after knowing this, then you would say this is fine. Impairment loss,
Mm.
as I've told you, you would see it there, but maybe it's nice to know the difference between impairment loss and depreciation. How can you distinguish them?
Mhm.
Mhm. Impairment loss versus
A, dep-
depreciation.
a depreciation is a method that is used
Mhm.
um, to calculate the, the tear and wear and tear of an asset
Mhm.
using the cost of an asset
Mhm.
uh, as like we use the cost of an asset. Then
Okay,
if
I've
we are
heard, no,
given
no worries. I've heard what I wanted to hear. It's fine. I wanted to
okay,
hear something from you. Okay, now let me tell you one thing. Your said is it deals with wear and tear of an asset, right? Now let me ask one thing.
yeah,
What if you buy a vehicle today, right? You have two vehicles,
Yes.
One is used and the other is not used. Are you going to depreciate them all, or one of them, or no, or none? Which are you going to depreciate? You have one asset, first asset and second asset.
Yes.
Okay. You have both them together, right? You are using the first
Yes.
one, the second one is not in use. 1 year passes. What are you going to do in the
Yes.
books? You have bought them all. Are you going to depreciate them all, or to depreciate one, or to depreciate none?
I'm going to depreciate the one I use.
That's what I wanted to hear, and that's what I expected, but that is not what is the case, right? Let me tell you.
Okay. Oh, both of them. Because
Yeah,
also the second one, even if it's not being used, but it's being depreciated.
yes. Now let me. I got to a point that I asked you that for.
Yes.
I had my reason for asking you that. I need to change some perspective from you. Okay. The point here,
Okay.
this is the point. This is the difference between impairment and depreciation. Depreciation is just a systematic allocation of the depreciable amount. You get my point? This is what I'm trying to
Okay.
say, right? You have
Yeah.
incurred the cost of 50,000 on a non-current asset, right?
Yeah.
But remember, you are going to use this asset for 5 whole years, right?
Okay.
So if you break it down for each year, you would get how much? 10 million. So if that's the normal cost, I expected to expense this. 50 million is an expenditure, right?
Yes.
So an expenditure could be a revenue expenditure or a capital what? Expenditure.
Expenditure.
Let's say you had to pay rent of 50 million per year, right? I would have said, oh, no problem. Rent of 50 million, this is an expenditure, it's an expense. I take it to the statement of profit or what? Or loss.
Yeah.
And then I go out there and say I have 50 what? Million, right? Do you know the reason why you do
Yes.
this? If the income statement is prepared for a particular year, for a particular period, usually a year, right? That's why it says, let's say, statement of profit or loss for the year ended. There is a word there for the year what ended. It means it covers the span of the year, right? In case maybe this
Yes.
50 million was for 5 years too, you wouldn't have taken all 50 to the statement of profit or loss. You would have taken only 10 as an expense here, right? And the
Yes.
remaining 40, you would say, we usually call them prepayments. Have you ever had something called prepayment? You would have made a
Yes. Something
prepayment. So
we
that one would
pay
be,
in advance.
yes, it should be an asset in the statement of financial position. The same applies here now, right? So depreciation has nothing to do with wear and tear. We are just trying to say that,
Okay.
okay, in year one, I incurred 50 million for an asset that has a useful life of 5 years, right? So instead of taking it all to the
Yes.
income statement and expense it, I would be taking then 10 million each year, even if an asset is not used, or
Um,
even if there is no wear and tear. It is just a systematic
okay.
allocation, right?
Okay.
Yes, so it has
Okay.
nothing. Now you told me that, okay, see, even if I'm not using it, it will just be automatically undergoing wear and tear. Yeah, yes, you sounded well. I was glad to hear that because we are following, right? But the
Yes.
reality here is that even if it is not used, as long as the company has bought it, has used its resources to acquire it, right? Even
Okay.
if there is no wear and tear,
Okay.
you don't have to do that. But impairment is different now, right? Impairment is actually that wear and tear, right? It is the measure of wear and what? And tear.
Okay.
Impairment loss tries to avoid the fact that in the books you have recorded an asset at 40, but actually in reality it is only worth 30 million, right? So you say, oh, this is
Yes.
very wrong. It gives a bad picture, right? We try
Okay.
to apply the prudence concept. Prudence is just trying, involves an exercise of caution, right? Not
Yes.
overstating assets. You avoid overstating, of course, not overstating and understating assets, but actually companies tend to overstate, right? So as to see well. That's why we say that, okay, the aim here is not to overstate the what? The assets. So
The
that's why you
asset.
say impairment loss. So whenever there's an impairment, you would say, okay, the asset has been impaired. And to know whether there's an impairment or not, you compare the carrying amount, right? The carrying amount
Yes.
against something called recoverable amount. By recoverable amount, we have seen those two definitions. Fair value or value news. It means you'll be, the company would choose. If I sell this asset, I'm going to get 25 million. If I use it, I'm going to get, let's say 20 million, right? So you say which one is better, and you compare it to what is recorded in the books. If you can get lower, much lower, you can say, okay, I'm just going to get a loss. So this is an impairment, right? You would see this
Okay.
standard. Okay, now, this Zoom, you said you need to record, but they now have a tendency of taking, after every 40 minutes, you rejoin. So no problem. You use the same link. It is going to cancel at any time. If it does cancel, you join back, right?
Okay.
Yes, 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 yes. Let me